But let's bring in Toni SACCONAGHI right now, and he joins us via Zoom. Toni, welcome.
Thanks for having me, Scott.
You theoretically could have picked any number of days over the past year to make this kind of a call. So why was today the day that you did it?
The stocks had a tremendous run, as you just mentioned. We wanted to get through earnings to make sure that our thesis really didn't change in any way, and it didn't. Our price target was $900 coming out of earnings, and our perspective is, the stock seems to be trading the $1,500 range, which we find very difficult to justify unless we really make pretty Herculean assumptions. And at this point, we're not comfortable, making those assumptions.
You admit today in your note that trying to call the direction of the stock could be, quote, a fool's game. As we note, when we come on the air, we introduce you. Tesla shares are positive. Why bother trying to make a call like this in this kind of a market?
It's really not a call that the stock is going to go down in the next month or two. It's, as an analyst, we set ratings, and our ratings have to be consistent with our price targets. And so objectively, when we look at various scenarios for the stock and say, what do we think is a realistic price target? Based on those assumptions, it's $900. So having a $900 price target and a $1,500 stock is just a disconnect. And so we move to an underperform or, equivalent of a sell rating. Look, it's very difficult to know when valuation may matter more. We believe at some point it does. I lived through, I think you lived through the tech bubble in 98, 99. And, many people thought the NASDAQ was extremely expensive at 2,500. If you called it then and said it's too expensive, you look like a fool for another year. It went to 4,200 and then it collapsed to 1,300. And so we're not making a call that sentiment is going to change on this stock anytime, imminently, or we have a defined catalyst. What we're saying is we really struggle with the valuation. If we have a rotation to value in the market, if we have more consideration around valuation, if Tesla slips up in any of its objectives, there's quite a long way to fall. And probabilistically, we think that's a more realistic valuation, closer to $1,000 than to $1,500.
As you well know, stocks can remain, if you want to say, overvalued for some period of time if you, in fact, believe that others have. Amazon, for example, people have said, well, the valuation doesn't fit. Netflix, well, it's overvalued. And those stocks have obviously had tremendous performances. It's very hard to make this kind of a call, especially with a following around a stock like Tesla, which is arguably unlike any and perhaps any other that we've ever seen.
Agreed. And look, I think our sentiment, a week ago was we wouldn't buy this stock and we think it's dangerous to short. I think in the near term, it's probably dangerous to short. We certainly wouldn't encourage people to run out and buy it. But, we set our price targets over 9 to 12 months. They're based on, a series of assumptions, and the assumptions to get to $1,500 a stock are truly Herculean. $1,500 a share for Tesla are truly Herculean. And so our belief is, look, over the next 9 to 12 months, probabilistically, we're more comfortable that the stock would be, its next move would be closer to 1,000 versus closer to 2,000 during that period. Of course, we could be wrong. We're in a market where growth is being rewarded richly. We have, an increase of Robinhood and other day traders, and we know Tesla is a highly trafficked stock. We have arguably some really speculative sectors in the marketplace, including the EV and broader environmental sector. And so, that's very tough that's a tough set of forces to fight in the near term.